Good afternoon, everyone. Welcome to Live Trading Action by In the Money Stocks. Today is May 22nd, 2019. My name is Nick Santiago. Thank you all for tuning in. Today, I'm going to show you a little bit of a trade lesson when we trade options. Now, the options alerts have been very popular lately. We've really knocked the cover off the ball recently with a lot of big winners. Today, I believe the options alerts posted 2 winners. One of them was my trade here with Ambarella. I collected 95% gain. That's a big winner. But here is the lesson I want to show everybody. The way we trade options here is when we think a stock is going to go higher, we buy calls. When we think a stock is going to go lower, we buy puts. But what you're going to see here is I entered this trade on April 9th. That doesn't look like a great entry to me. So if you take a look at April 9th, the stock was trading around $45, and then it proceeded to go all the way up to $52 by April 24th. That's where it topped out. Then you had a little bit of a down tick, little lower high, another lower high, and then a free fall here. And then today the stock is down 12% from yesterday's close, taking a bloodbath hit, and I was able to capture 95% gain. But here's the lesson. The one thing I did right on this trade, even though my entry was absolutely horrible, I gave myself a lot of time on the clock. I used an August 16, 2019 expiration date for these puts. So again, I'm buying puts here. It goes against me. I'm losing a lot of my value, but I had a lot of time on the clock. And you could see once the option came back to where I got in, and then it finally cracked and broke down. It did what I thought it was going to do. I had the 37.50 strike. We got pretty close to that. And again, I was able to bank almost 100% in this option. So the lesson here is to give yourself a lot of time. Another option I did this with was Intel. The entry was absolutely horrible. When I got into the Intel option, put option that is, I got into this on March 8th. And what you're going to see here, March 8th, this is not a great entry because the stock went on March 8th, it traded around $52.50 and went up all the way to $59 on April 17th. Then it started to go lower. Then it had a big gap down after the earnings, and then it continued to flush lower. I was able to capture just a 42% gain in that option, but nonetheless, I was out of the money so long. So if I didn't have a long time on the clock, that option would have expired worthless. Now, what I did do with that option was I gave myself out to the 3rd week of July 19th. So that worked out nicely, and I was able to capture a really good gain. Now, if you take a look at the spiders recently, and you just see the sell-off that we had from the spiders at 295 all the way down to 280, what did we have last week? Options expiration. So a lot of retail options traders went ahead and they bought put options here. And what did the institutions do? They lifted the market and they rallied it up, and the near-term expiration expired, and those options those put options that the retail trader bought here expired worthless. And that's a game that gets played all the time. So if you're going to use options, the moral of the story is, whether it's a call or a put, give yourself some time on the clock. I always tell traders in the money stocks to give yourself at least 2 months, preferably even a little bit more. So that's the lesson I wanted to share with everybody today. Don't trade the near-term expiration. Pay out a little bit, pay a little bit more money, and get yourself some time on the clock. Use a further out expiration. With that being said, everybody, I'm going to leave it here, short and sweet. Hope you enjoyed that trade lesson. Once again, take a 7-day free trial to our research center or our intraday stock chat room, or just join the options alerts, and you can trade right alongside of us. Have a great day, everybody. See you on the charts.